crashed it on purpose. Trace the orders. Find the source.
Folks, what happened in the gold and silver markets last week should infuriate every American investor. Gold touched $4,000 an ounce before manipulators dumped 42 million ounces of paper silver in just 15 minutes, causing a flash crash during the thinnest trading hours, when they knew they would cause maximum damage. But here is what they didn't expect. Gold bounced back 2% within an hour, proving this was nothing but desperate manipulation to shake out weak hands before the next leg up. And now Morgan Stanley is telling clients to put 20% of their portfolios in gold, admitting that there isn't enough physical metal for everyone. Colin Plume from Noble Gold is here to expose this manipulation and reveal why this engineered pullback just created the buying opportunity of the decade. Colin, welcome back.
Yeah, good to be here. Yeah, this is unprecedented when you see these things happen. Paper shifts, sell-offs. Also in London, they don't have enough silver, and a lot of people are trying to get silver repatriated back here in the U.S. Wow. So we're seeing a lot of these things happen. But when you look at on the physical side, the demand is still so high. I mean, we've never seen the demand like this before. So people are continuing to buy and hold, but on the paper market, there is this, these crashes and these dumps. But
right, so there's clearly a shocking manipulation. 42 million ounces of paper silver dumped in 15 minutes during Asian trading. Walk us through how they pulled this off and why they failed.
Yeah, I mean, I think what you can do is you obviously have margin calls. My big concern is if they do what they did in 2011, where they raised the margin call. That was really the beginning of the pullback in 2011, where they made it more and more expensive to continue to buy silver. And so much of the market is dictated by these kind of quick day traders. They didn't, win on this one. It's always going to correct because there's always a point where the market says it's a good opportunity to buy. And so we're kind of consolidating in a range. Now, this is totally normal because we went on an unprecedented run. I mean, silver to its peak this year was up about 70%. That's not a normal uptick in any investment. And you see these things in AI, and then they totally collapse. But the good thing about gold and silver is there's a floor, and it's consolidating in a price range where it's going to test a little bit, but it's going to figure out where the market wants to buy it and continue to buy it, and it'll hold. Unlike other investments where once they believe that the profit is already there, they'll just go on a total tailspin down, like you've seen in all these cryptos and things like that. We've seen this time and time again. Silver and
gold. Okay, so gold touched $4,000 before this attack, then it bounced right back. So what does this tell us about the differences between paper markets and physical demand?
Yeah, and I think what you have to look at too is are the larger buyers selling gold? And no, they're not. They're central banks are continuing to buy. Institutional banks are continuing to buy. I mean, Jamie Dimon just came out and he says that 5,000 gold, 10,000 gold. I mean, he's become a big proponent and believer of gold, and you're seeing that more and more with institutions that would recommend the old portfolios where they tell you to buy bonds and all these things. Now they're telling you to buy gold. So I think it's testing the to answer your question, Gary, it's testing the 4,000. Could it hit 3,800, 3,700? Probably. There's some sell-off potential there. But our data shows that that's kind of that 3,750, 3,800 would be kind of the floor. Then you'd really know what's going to happen with the metal, because if it holds there for 6-8 months, then everyone's creating a new floor, and you have this stair-step market. And if you go back after 2011, once it dropped back down, if you go back from 2011 to today, you do see gold has moved very similar to a stair-step.
Well, what's interesting is I was talking with my trainer, you remember Gary, and we were talking about gold, and he's like, damn it. He's like, I should have bought gold. He's like, I should have been paying attention. And, I'm like, hey, dude, that's like, it's over 4,000, Gary. He's like, I know. He's like, I should have, been paying closer attention. But now with this new floor being established, this is really the perfect time to get back in.
Yeah, it reminds me a little. I was thinking a lot about there's like in terms of price of things because
Mhm.
since the 17 years I've been in the business, people have always said gold's too expensive. They've always said that at every price. Every price has always been too expensive, and then it always exceeds. But it's kind of like whatever you perceive it to be, it is. And like you and I remember when gold was less, and so we think. But when you go in today and you see like there's this unbelievable supermarket called Erewhon that all these kids go to. There's like you go there and these kids are buying smoothies for $18 to $25, and
That's crazy.
and it's crazy. It's crazy. But if you ask a 18-year-old to 25-year-old, 30-year-old, if you ask them about they actually don't think it's that crazy because this is their norm. They've just come out into the world and they're paying these prices. It is more than maybe the place down the street, but it is their more norm. I think the problem is we're looking through eyes where we remember things being so much less, but actually the price is what the price is, and it's what the market will bear. And I look at it like these prices for metals these are the new norms. These are what we got to get used to. And also, you're looking at an asset that the market share is gone up so much, so many institutional buyers. The market share of gold it's an elevated level. It's not like the thing that the relic of the past. You and I have talked about this. They always say it's the relic and it doesn't pay a dividend. But now this is the new norm for gold because bonds are not the thing that people want to buy anymore. They don't feel good about it. The return is not high enough. So you have people that these investors and these institutions that used to buy bonds. This used to be the big buy. That's gone. And even Morgan Stanley and a lot of the institutions have changed their allocation for investors. And bonds have moved to the wayside. Gold has replaced that. So I think that's, the 20% gold in this tweet here, 20% in gold. That's what they're telling people today. So I think
Wow.
that's the thing that's changed now is that gold has become this asset because you're buying the limited supply. You're buying all the technology that they use for gold, and the uses continue to go up and up. And you have to realize the world today, the shape that we're in, the debt that we've created this debt spiral that's never going to end. It's never going to end. It hasn't ended. We can't fix it at this point. So everything's going to continue to go up and up in price. It just depends on the timing. And so right now the timing is gold's here. It's going to set some floors. And then in 5 years from now, we're going to say, you remember when we said 4,000 gold and it's at 8, right? And the same thing will happen again because this is the price of today. This is what people need to realize. Like you're not going to buy, these things anymore for 2,000 or 50. It just, those prices are gone. I mean, if the price dropped to 3,500, the amount of gold, central bank gold buying would be so massive that you and I probably couldn't even buy gold. They would buy
Are you serious?
they'd buy every ounce that was available. They would buy everything. And so that's the thing to think about is that the institutions realize
And as soon as they do that, the price is going to just skyrocket.
oh, absolutely. Absolutely. And actually this year the central banks have been very coy about how much they've been buying because they've been saying like 65 to 70 tons a month. But, Iraq and China, they always mislead the public on how much they're buying. And then 8 months later, you find out that they bought a quadruple the amount. It happened last year. China last year in February said, we're going to hold back on buying gold. You got back into September, October, they had bought 4 times their normal amount. So, they don't want you to know how much they're accumulating behind the scenes. So, listen, I think it's like you have to look at the case scenario of gold is like where could it potentially go? Jamie Dimon 5,000, 10,000. I mean, now we're starting to see these ideas. Could gold get to $15,000 or $20,000 an ounce? And
Yeah.
with this demand, it's not unreasonable for things to happen that way. And I think also, real estate's still got a few more years. So it's like all these investors who used to buy real estate, they're being coy. I mean, I talk to investors every day that over the last 4 or 5 years, they would be like, okay, I'd buy some gold, I'd buy some stocks, I'd buy some real estate, I'd buy some bonds. They're not buying bonds and they're not buying real estate. So where are they going to put their money that they feel good and safe about? And so that's why gold has really had this massive move.
So Staying on the Morgan Stanley topic, their chief investment officer recommending 20% gold. You saw the tweet there, admitting there isn't enough gold in the universe, okay, for everyone to achieve this. Are we talking paper, or is this what they're advising? Paper, gold? But you guys actually offer the real thing, the real tangible asset. So, I mean, is this going to be difficult for you to acquire that much gold when people start calling?
Yeah, I mean, Chase Bank is trying to get another vault in London too. They're trying to add to locations because there's so many people that are buying into the market right now. And ultimately, I think the telling thing is, the thing we talked about earlier this year was the report that came out from the European Central Bank, where they said they advise people, this is their central bank, so this is the Federal Reserve of Europe. They said that you should always try to get into the physical form, and they actually advise people to get out of paper because they know that there could be a surge and a crunch in the paper form. So they were telling me this is a central bank. So I think ultimately, yes, there could be a point where it is very difficult for us to get it, especially on the gold side. Now, on the silver side, what's really interesting is that you have this manipulation, and you're going to have this in silver, and they manipulated with the paper form and 30, 40 million ounces. But the shortage of silver right now annually is 148 million ounces. And that's been going on for the last 5 years. So they're having a real shortage. So what I believe will eventually happen, definitely in the silver market, and we'll see about the gold, but in the silver market, what I believe will happen is that the demand on industrial will be so big, it will dwarf, and they won't have enough for retail investors. They will not have enough coins. And I guarantee you in the next 5 years, the U.S. Mint will say, we can't get enough silver to make silver eagles. Because the solar panels and all the other uses and the drones and all that technology will just continue to buy it and continue to pay whatever it takes.
Holy
And
cow.
they won't have enough to make, they won't have enough to make this stuff anymore.
Oh my
And
goodness.
the amount that's out there will be the amount that's traded. So whatever coins or bars that are left will be what's left. I truly believe that will eventually happen.
Dude, that's crazy. The U.S. Mint couldn't have enough silver to produce.
Well, and it can happen because at the end of the day, it's what people will pay for. And if the U.S. government, and I mean, Saudi Arabia just did a massive purchase of silver. Russia did they bought $150 million in silver last month. So if they continue to buy it, the institutions and the central banks, like, why would they spend the money to make coins and bars for people like you and I? Like, they're going to use it for themselves. So I think that's where and if you see the amount in the retail market, it's shrinking. And what was interesting over the last 2 years is a lot of the silver that was, in jewelry, they would refine, and that would go out to factories for solar panels and all these other uses. And those uses are going to continue to grow and grow. I mean, they think solar panels alone could end up being anywhere from 16 to 18% of the silver that's pulled out of the ground. So these are things that will continue to happen. So I think, yes, there's the monetary side. There's the idea that institutions want to hold it and central banks want to hold it. But I do think there will be a time where the only way you'll be able to buy these things will probably just be they'll just have the ETF, and then whatever coins and bars have already been minted will be out there and people will sell them. But I think it's going to be harder for the mints to get gold and silver in the next 5 years to actually make these bars and coins. I think it's going to be much more difficult, and we'll only be selling what's already been minted or created.
Now, central banks, they've become completely price insensitive buyers, dumping dollars for gold regardless of price. Is this why the manipulation isn't working like it used to?
Yeah, that's 100% right. That's why. Two things. And in 2011, which is the last time we had a big correction, the other markets started to correct a little bit too. Real estate got better. You saw the equity markets get a little bit better. The bond market had a lot of there was a lot of demand. So I think that's a big reason why you saw the 2011 crash where gold went from 1,900 down to 1,200 and silver went from $49 down to $14. Is that other assets just look so much better and so much more appetizing. I don't think we're seeing that appetite for bonds and for real estate, and I don't think it's going to come back as quick as people believe. Yes, the Fed's going to cut rates again, but there's so much more that has to happen. Even if they cut rates, it doesn't mean the mortgages are going to go down. It doesn't mean borrowing rates are going to go down. They have to also cut rates and do stimulus, I believe. I think that they're going to do quantitative easing next year. I think they're going to expand the money supply. Absolutely. Because if they continue to cut rates, Gary, from now and they go the last quarter this year and the first quarter next year, and mortgage rates and borrowing rates do not drop, what other tools do they have to get more money out there? And quantitative easing would be the only other way. So I think when Trump puts in the new Fed chair in May of next year, I think they're going to go aggressive growth, and I think they do quantitative easing. And if you look at what happened in gold and silver last time they did quantitative easing, which was 2008, 2009, they went on a massive run. And I think that's, if my scenario, what I'm putting out there is true, then I think 10,000 gold and I think $200 or $300 silver is feasible before Trump is done with this term.
Oh my God. My mind can't even comprehend that, Colin. Can't even comprehend that.
Yeah, so I think we're in a consolidation price size, and then we're going to have to judge. But people should watch this and listen. This is one man saying this, and I could be wrong, but I truly do believe that if mortgage rates and borrowing rates do not come down, they're going to have to get more aggressive and figure out another way to get more money out there, because banks are still very cautious right now. They're not lending, and property value. There's more properties on the market today than ever in the history of the real estate market. There's just nothing moving. So what are they going to do? They got to get rates. They got to get more money out there. So I think stimulus is the way that they're going to do it.
Now, the gold-silver ratio is in the 80s, but the bull market's top below 40 with inflation-adjusted silver worth 4x current prices. What's the opportunity here?
Yeah, so in 2011, it hit 33 to 1 ratio. I think the 100-year average is 60 to 1. So 60 to 1 would put silver I think in the low 60 range, high 59 range, which is what in my book, Silver's a New Oil, which is on this side. I thought from December last year when I wrote the book and released it, my prediction was silver hit $58 an ounce within 12 to 18 months of the book. We got pretty close at 53. We're consolidating here at 49, but I think the next run gets us to 58, 60, and we start to trend closer to that 60 to 1. I think we're going to go back to kind of the norms with gold and silver. So I think a 61 ratio would be where I would anticipate things to go.
Wall Street Gold posted this 18 seconds ago. Silver futures is pushed back above $47. Momentum is turning up fast and pressure is building. This is real-time market analysis. What's your take on these numbers right here?
Yeah, I mean, we've had 2 big sell-off days. And so I think the next 1 to 2 weeks will be very telling where things are going. We've seen a lot of people dollar cost average buy at these prices and then have a little money left over to see if maybe it pulls back a little bit more. But yeah, I do think there's a consolidation range that we're looking at. That the cup and handle for silver over the last 50 years really is indicative of this and what's happening. So it's testing this, 48 to 53 range. But I think it's an amazing opportunity in terms of on the ground, the demand is high. We're seeing massive amounts of buying. We are busier than we've been in probably, I would say, since, January. We've been just extremely, extremely busy. Demand is high. I think people are
look at this. This right here. Something big is afoot. We stay aware and alert now with China, Russia, and India taking silver delivery. Manufacturers wanting to stockpile silver at cheap prices. Silver prices. I can't see silver price fixing going on forever.
Yeah, and that's what I'm saying. Is they believe the price is cheap. They think it's a value. That's the thing. That's the thing that we have to look at is why do they think it's a good value? Why are these countries continuing to buy so much? They know they need it for military. They know they need it for industry. So they like the price. Countries like the price. And I think that's the thing that I always look at is like, if they're buying in at these prices, what information do they have that we don't know? I mean, as much as I'm
Well, look what this guy's saying. Top Swiss analyst, this is the final shakeout before the explosion. The physical market has broken while paper traders play games.
yeah, absolutely.
Jay Stager, top Swiss analyst. Don't be fooled by the latest market drop.
Yeah, it's unbelievable.
Wow.
Yeah, I mean, and listen, you can make a lot of money in these drops, right? Like these traders, these one day drops, they'll make a fortune. But then, like, what upside are the regular investor going to miss? Because most people aren't day trading and taking advantage of this. This isn't. This is like, you have these traders, and this is what they do. They see a top and they sell, and then they're looking for these charts and these candles and all these things that they look at. So I'm excited about it. We are seeing a tremendous demand. We're shipping quick. People are happy. I'm getting videos from clients, that they're happy they finally got into silver. So I think this was the shakeup that needed to happen. It needed to hit that number, especially silver. And now it's giving people a lot of confidence. Like, okay, it hit 53. Yeah, it's down a little bit. I bought it. I can get in now. And then they're stacking. And I think the number one thing you and I know, Gary, is when you buy gold and silver, it's one of those assets you buy and you just set aside, right? It's your insurance. And so there's never a bad time to have that kind of insurance. And so that's why a lot of people are taking some stock market profits, getting their money off the table and buying a little insurance. And I think as long as you continue to do that and you have different things working for you, I think you'll survive any market. But I think this market is definitely a market that's unique, and I think we're gonna see these crazy numbers. I think the quantitative easing is gonna happen. I think there's stimulus coming. That's what I would predict.
Now, gold mine production, it's been falling for 7 years consecutively. How does shrinking supply combined with central bank demand create this perfect storm?
Well, it dropped partly because it's so expensive and so difficult to mine. In certain places all over the world, mining has gotten really difficult. During COVID, the big issue with silver wasn't demand; it was the miners weren't working. Like they were shutting down mines left, right, and center. So it's as much as people are buying, as much as central banks buying. Big picture, there's only enough gold in the world. It only grows, the supply grows by 1% a year. So as much as there's buying, as much as we see all this happening, it's people that can't afford it anymore having to sell, and the wealthy buyers buying, and they're seeing this massive opportunity to buy. So that's the thing I would really keep in mind when you look at these things, is that there is so many wealthy buyers that are adding, and really the sellers are people that are just can't afford to hold on anymore. They just need to sell. They've had great profit, but they don't want to. And I hear this every day from people that are calling us. They just say, like, I wish I didn't have to sell. I don't want to sell, but I need it, which is great. They're in profit. They're doing great. And that's the idea behind gold, is when you need it, you sell it. And everybody has that situation happen. But the majority of I've had clients that like had big bars, and instead of selling the big bar, they want to like sell half of it. We moved them into some smaller bars, and then they took some in cash, because they just say to me that I don't want to sell everything.
Right.
I just need a little bit of money to survive, or I need to do a required mandatory distribution, which is required by the government. So there's this, and this is a new change. Normally when the price went up, people would just sell and take the profit, but now they're like, no, I want to keep some money in there. I want to keep some in gold, and then I also need some cash. So I think that's a big thing that we're seeing, is that big shift is happening. And also we're seeing a lot of clients that are selling some gold and moving into silver, because they think the silver market's still going to go up. So we're seeing a lot of that happen with our clients.
Now, with respect to the government shutdown, we're in week 4, week 5. Trump threatening no back pay. The UK is borrowing just to pay interest on debt. Yeah. How does the fiscal crisis drive precious metals markets?
Yeah, I mean, I think that the shutdown is hard in that it's bad overall. It's just tough on the economy. As much as like they need this negotiation and we need to make cuts, and this is why they're continuing to go this way. At the end of the day, like, the amount of money that these people make not getting circulated back into the economy and not paying for things and buying things it's not good for the economy in general. I think the physical, we have a lot of like government employees that want to move into gold and silver, and they can't because the TSPs are slowed down. I mean, we had this all happen during the IRS. A lot of the IRS was shut down. I mean, it's a tough time to be in business and to try to move things forward. It's tough if you're in the government. I'm hoping in the next week they come to a deal. But I understand why the president would want to have this fight now because we're in such I mean, the thing is, we're in such a massive hole right now. Like, we have to make cuts. We're spending $2 trillion more per year than what we bring in for tax revenue and other revenue. So at the end of the day, we have to have these fights, and we can't just rubber stamp and go up and increase the debt ceiling every time. So it is a hard time. My heart goes out to everybody that is in this position, and I know, and it's hard. But at the end of the day, we eventually have to have this fight. The fight is we got to spend less money, and if you and I were like putting all of our life on credit cards and moving from one credit card to another every 60 days, there's a point where you go that this has got to stop. And I think, Gary, we're at that point. I think that's the point we're at. So. But yeah, do I think this has an effect on the metals market? Of course, because people are like they're fed up with some of these other investments. They want a safe return. So I think there's this just general movement to safety, and I think that's a big push why gold and silver have continued to go up too. It's a lot of different reasons why people are buying gold and silver today.
Now, for someone watching who understands that this is their chance, what is the smartest way to take advantage of this manipulation that was created as an opportunity right now?
Yeah, I think for anybody that hasn't acquired gold and silver, this is an amazing time to learn about gold and silver and talk to somebody at Noble Gold and see if this is right for you. I talk to people so much. I talk for the last 17 years, and so many times people say like, I want to do it, but I don't know how to get started. This is your chance to learn. This is your chance to learn how to get started. This is your chance to get the education and to learn if this is the thing for you or some of your portfolio for you. And ultimately, I will say the thing that I hear more often than not is I feel better after I bought gold. I feel safer. I feel like I did the right thing for my family. And that's what I hear more often than anything after somebody buys from us. So if that's something that appeals to you, you want to feel better, you've been uneasy, give us a call. Let us send some information. We have guides on gold, silver, platinum, palladium, and there's a strong argument right now to maybe having all four metals. I think it's probably the first time since I've been doing this. We have guides that explain the different metals in detail. You can buy each of them. And the good thing to know is that when you buy it from us, you're buying bullion, you're buying the things that central banks are buying. You're not buying any rare coins. We're going to give you a great price. And then the thing that everybody loves is just unbelievable service. We're around. You call us. Whatever you need, we're here. So if you like that human touch, you want to talk to a real person, we can help you do that.
Give out that number real quick.
Yeah, 877-646-5347. And I want to give a shout out to two guys. They just had their 6-year anniversary with us, Steven and Mandai. Great people on the floor. If you're looking to talk to somebody, these guys have 6 years with me in gold and silver, hundreds of millions of dollars in gold and silver sold. Between the two of them. So yeah, if you're looking to talk to somebody, Steve and Mandai, give those guys a call. Great, family men, kids, patriots, give those guys a call. They'll definitely be able to help you out.
Well, I can only imagine what it feels like, if you're worried about markets or manipulation, but then to suddenly be able to hold that tangible value in your hand, knowing that it's there. Right. Yep. It's not something that's going to just disappear. It is in your physical possession. And, right. You can't say enough about how important that is. Absolutely. So, Colin, thank you for providing Next News viewers with that safety and that security and for sponsoring this show.
Absolutely. Thanks, Gary. Always a pleasure.
All right. So, Patriots, you just witnessed the truth about gold and silver markets. The manipulators are desperate, dumping 42 million ounces of fake paper silver to crash prices, but physical demand bounced gold right back. Morgan Stanley admits there isn't enough gold for everyone. Central banks dumping dollars Mine production collapsing, and silver is set to explode 4x from here. This pullback is a gift. Your last chance before the monetary system resets. So don't let paper traders steal your opportunity. Go to the link in the description, nextnewsgold.com right now, or call the number. Protect your wealth with physical gold and silver before it's too late. We can't thank Colin and Noble Gold enough for sponsoring this program. We'll see you next time.